I've signed up for every single analysis software, and there's really nothing that does this. I think I should go and build something super intuitive, very, very simple, bring that barrier of entry down for a trader to actually be able to trade with data on their side versus their emotions, and keep it very clean. Like, the language is very simple.
Good morning, everybody. Welcome, Andrè from Edgeful. How you doing this morning, Andrè?
I'm great. Great. Thank you for having me. My name is Andrè. I'm the CEO of Edgeful. My background is in finance and accounting. So I worked at a hedge fund in Boston called Weiss Asset Management, and I worked at Goldman Sachs for over 2.5 years. It was a wonderful experience working at both those firms. I mean, the hedge fund is just like such a great group of people to be around and to learn from. Same thing goes for Goldman, obviously. Being around those minds really helps you see the world differently, especially the financial markets. And the financial markets, something that I don't know what triggered my obsession with it, but like since I was in early high school, I've always been so fascinated with the markets. And that's what led me to study finance and accounting, which then led me to work at a hedge fund, which then led me to work at Goldman Sachs. And working at Goldman was an incredible experience, but it wasn't really for me. It was working from 7 a.m. to 3 a.m. every single day. I was just thinking about, I don't want to do this anymore. I want to find something that I want to do for myself. What do I love to do? I love the financial markets. So I left Goldman and I started to personally trade. When I started to personally trade, I was looking for these strategies. I was looking for these concepts like, how do I know my daily bias? The number one thing is, how do I know my daily bias? Do I want the market to go up? Am I expecting the market to go up? Am I expecting it to come down? I had no idea how to determine that every day. One of the things as I did more research was this gap fill concept. That gap fill concept tells you if price opens today above previous close, you want to have a short bias targeting this area. Gap fill is very, very simple. It's one of my personal favorites. I can go into actually the founding story of what actually caused me to build Edgeful, and it was the gap fill. Because as I did research on this, you go on X, you go on YouTube, you go on Instagram, you can see everyone says, oh yeah, the gap's always filled. That's
Yeah.
obviously not the case. And I have a very analytical background. Obviously, I'm very comfortable with Excel. I have certifications. Like, I'm very, very comfortable with data. So at the time I was trading options. So I buy a bunch of data on Tesla and on SPY, put it into Excel. I go through personally and I figure out all the gaps up, all the gaps down. And now I can see, okay, this is the percentage of them that fill. So if I know that 70% of the time X is going to happen, I can have a bias in this direction with this target. And now I'm like, perfect. This is really helping my trading. I'm getting really good insights from it. Now I start to add more and more into this Excel file. And for those of you who have experience with Excel, you know it can get really messy really quick. And I start to add more and more reports like gap fill, opening range breakout, all these different things until my Excel becomes this monster. And I'm like, you know what? It's taking way too much time to do this. There's got to be something out there that already does this for me. It tells me what weekdays make the high and low of the week most often, etc. Go online. I've signed up for every single analysis software, and there's really nothing that does this, which is pretty shocking. I've gotten on the phone with over 2,000 users, and nobody has been able to tell me that they've seen a product like Edgeful. So because I couldn't find anything, you know what? I think I should go and build something super intuitive, very, very simple, bring that barrier of entry down for a trader to actually be able to trade with data on their side versus their emotions, and keep it very clean. Like, the language is very simple. I want to avoid that corporate jargon because it makes it very difficult for new traders to come in and really grasp onto it. So there's two very big levers that we pull on, and one of them is keeping things very simple, and the other one is keeping things very clean and nice to actually like look at and to experience.
That's one of the things that I really thought was impressive about it. Not that it's a simple thing, but the simplicity of the visual of it, right? It gives the accessibility to everyone to be able to read that and give you kind of a bias for the day, which is generally the first thing that we want to decide when trading is like, which way are we going to go? Especially in the futures market when it's long or short, there's really not much else to it, right? So being able to get a simple visual of where that might go is important to beginning traders and even traders that have been around for a long time, I think.
For sure.
Let's show it off a little bit here.
So obviously I have NinjaTrader up here to the left. Edgeful is going to be on the right. What I want to do is I want to walk everyone through how everything is laid out first, just so you get a good understanding of where to look for certain things. Starting up top, we have the toolbox and we have the what's in play. The what's in play up here is currently in beta, but this section is going to tell you when specific reports are actually setting up. So for example, there is a gap up today on ES. This is the current price. Here is your target. This is the gap size. So we have it for the gap fill, we have it for the orb, all these different things. The what's in place section will tell you when certain reports are setting up. That's the key. So I'm in the toolbox right now. This is like the core of Edgeful. This is like, if anyone has seen Edgeful before, this is probably what they've seen. Up top right here, this is the nav bar. This is your steering wheel. This is how you do literally everything on the site. We have the markets. So we have stocks, we have Forex, we have crypto, and we have futures. So regardless if you trade options or whatever else, we have something for you here. Then the report type is next. We have 3 report types for price action, volume, and indicators. We also have them grouped out for scalper, day trader, and swing trader. So if you know that you're a scalper, you just go straight to the scalper section. It's going to show you all the reports for scalping. Then we're in the price action report type right now, right over here. You can see when I click on this, you're going to see all of our reports. They're also broken out by different groups. I'm going to touch on the more popular ones. Then all the tickers, we have every single ticker. We have lean hog, we have copper, we have whatever you want to trade. We have it. If we don't have it, you just send us a message on support. We get it added in there. Then the sessions. So for futures traders, this is actually really important because this allows you to filter and narrow down all the reports for specific sessions. So if you trade the London session, for example, you can now filter all of the reports for that London session. You trade New York, same thing. We also allow you to use the daily session and create your own sessions as well. Let's say you trade the New York session, but you started at 8 a.m. instead of 9:30. You can just go and create your own session. Then finally up here, the date range. This is going to allow you to choose how far back you want the report to look. So we have up till 5 years. We have these little shortcuts. You can also pick your own start and end times. Does that make sense?
Absolutely.
Then going down, these little bubbles are going to be filters on the report. So we're on the gap fill report. We're on standard. You can see gap fill by size. You can see gap fill by weekday, by time, etc. Then we always have a visual representation of the results, table representation too. So you can actually see the frequency of what you're looking at. You bring down that date range to 1 month, the frequency is going to drop. You bring it up to 5 years, frequency is going to increase. Then going down a little bit more, chart explainers. This is actual visual explainer of what a gap is. So a gap up is this, a gap down, gap up filled, etc. We have some more details right here, just giving you some information with examples, etc. We currently have a suite of indicators and we're actually building them for NinjaTrader, which will be out probably by the end of January. We have 30 right now, but we're going to create all of them so you can have them right on your NinjaTrader platform as well. Then some more explainer text, an actual table that breaks down each of the days that make up the results. So right here, you can see 74%, and then you can see every single day that makes up that 74% right down here.
And you can see the price chart too. That's pretty cool.
Yeah, exactly. You can click and then it will update the price chart. And then finally, the videos. These are super, super important because they explain exactly what the report is measuring, how you can use it with a live chart example within 5 minutes. This is not a course. These are not 30-minute videos. These are quick explainers on how you can understand what the report is doing so you can take advantage of it when you see kind of odds like this.
I love the efficiency of it, right? It's nice and easy right there in front of you. The videos, I'm sure, are very helpful too.
Yeah.
I saw the FOMC part of it. We had a big FOMC day yesterday.
Yeah, that was crazy.
Very, very top of mind for people. Maybe we could dive into this a little bit as well. I think that obviously it's very relevant.
It is very relevant. So let's look at this report. This is the FOMC performance report right here. We're looking at ES in the last 3 years. So the way that we have this report broken out is by all of the initial positive reactions at 2 p.m. Eastern time. So for example, in this case, you can see this is the 15-minute chart. This would be like on a 15-minute chart. If that 2 p.m. candle is positive, we group all those days together. And then the 2 p.m. candle is negative, group all those days together. The reason we do that is because if you just blend them all together, they average out to be 0, which obviously is not very helpful. So if you just wait that first 15 minutes, you can see what tends to happen. Now, looking at yesterday, a little bit of an anomaly day. Because typically, if that first 15 minutes is negative, which you can see right here, typically by the time Powell comes out to speak, that move is going to be reversed. So yesterday was one of the days that was just a complete, 1,000 points on the NQ is insane. But typically, if you go back and you look at all the FOMC days, if that 2 p.m. candle is red, you're going to see that move retrace and continuation for the rest of the day. Now, if you look at the positive reactions, typically 2 p.m., it's going to be positive, and then you're going to see continuation in terms of being green for the following hour or so. And this is on ES. You can obviously look at NQ, you can look at gold, you can look at oil, you can look at whatever you want. But this specifically is something that I like to use more so for the negative side. Obviously it wouldn't have worked yesterday, but historically it does work. But more so for the negative side, when I see that initial candle be red, I want to be looking for longs. One other thing to note, is that as a trader, you don't need to be right every single trade. You just need to make sure that your winners are bigger than your losers. So even if you did lose yesterday, which I'm sure a lot of people made money, I'm sure a lot of people lost money. But even if you did lose yesterday, it's just important that you don't let your losses be these massive losses where it's very difficult for your winners to kind of outpace them. So even if you do take a loss, even if you take an A+ or a high probability setup and it doesn't work, that's okay.
We talk about risk management here a lot, right?
All the time.
That is an absolutely massive, important deal when trading, is being able to cut those out before it does become a situation. But I'll let you continue.
No worries. And I like to make it a comparison to sports because it just clicks with people. For example, Steph Curry's free throw percentage is very, very high, like north of 90 something percent. So if you're going to expect him to make those shots, that's a very high probability setup. Now, if he misses one, does that mean that Steph Curry's free throw percentage goes out the window? Absolutely not. It means that you take that setup again the following time, like let's say it's a gap fill or an opening range breakout or whatever else, you take that again because it's still a high probability setup. It just didn't work that specific time.
I'm personally going to let Steph Curry pull up again. That's definitely a recommended. Show us another thing. I mean, open range breakout is another thing I know futures traders are very interested in. And if you don't mind, maybe let's try Nasdaq.
For those of you who don't know what an opening range breakout is, it is the high and the low of the first 15 minutes of the market open. So in this case, we're looking at the New York session, which would be from 9:30 to 9:45 Eastern time. This is the opening range. This is the high and low of the first 15 minutes right here, these two lines. This report measures how often does price break out just to the top side, which is right here, just to the bottom side, which is right here, and then how often does it break out of both sides. So what you can see here with the ES, 62% of the time, price is going to break out of one side, reverse, and touch the opposite side. The way that I recommend actually to use this is wait for one side to break that orb and then take the reversal to the opposite end. Because for the most part, price is going to break both sides. So you don't want to expect just continuation down one side when you're trading the ES. Comparing this to the NQ, still very high probability, but not as high. So the NQ, you can expect more days where price will just break out of that 15-minute orb and continue in that direction. Understanding the different instruments that you're trading and the personality of those instruments is extremely important, because if you see a stat on ES and you have this idea that ES and NQ are the same, they move the same. Now you're going to trade that on NQ, it's not going to work as often because NQ tends to have more continuation. We get comments a lot about how does this work over 10 years? How does this work over 20 years? I want to go further back. 5 years is not enough. My answer to that, and the reason that we have 5 years max, is that we're traders. This is not a platform for investors. We are trying to capitalize on intraday moves or multiple day moves, and the market doesn't move the same way now as it did in 2004 or in 2014. So if you're going to use that big of a sample, going back 20 years or 10 years, 95% of that sample size is going to have irrelevant data by being in old market environments. Right now, even since the election, the market has clearly shifted. So if you want to go back 5 years, you're talking about pre-COVID, you're talking about the bull run for 2 years, you're talking about the bear year that we had. And then now, again, the market has shifted so many times that if you want to look that far back as a trader, you're going to be diluting the relevant information that you actually need to capitalize on today's market. So what I recommend is to always look at the 1 year, compare it to the 6 month, and compare it to the 3 month to see how they're doing. Are they aligning or are they different? Does that make sense?
Yeah, absolutely. Time period is completely relevant, right?
Just to give you guys kind of a different view, what I wanted to talk about was the volume and range by weekday. This is a report. It is in the volume report type. So I was just in the price action report type. Now I'm in the volume report type. And we're looking at ES and we're looking at the New York session in the last 6 months. So now there is a clear uptrend here as you go throughout the week. So what this measures is the average volume, which is the blue bars, and the average range, which is this white line, as you go throughout the week. There's clearly an uptrend in volume and range. I mean, it does peak out at Wednesday, but what you can see here is Monday, Tuesday have very clearly the lowest volume and the lowest range. And the volume, if you look at the actual numbers here, the average volume on ES is actually significantly lower than a Thursday or a Friday. So Thursday, Friday, roughly 1.2 million. Monday, Tuesday is 950 to 990,000. Percentage difference of volume is very significant. So Absolutely. If you're trading on a Monday, you need to account for that. And maybe you want to use lower size. You don't want to stretch out your profit targets as much because you should not expect these moves to be bigger. So typically, just to summarize, Monday, Tuesday, we'll typically have choppier price action. Wednesday, Wednesday, Thursday, Friday, we'll have more continuation just so you can kind of adjust your trading style, adjust your trades for that.
This is really cool stuff. I think this is going to be very beneficial for a lot of the viewers out there. And I would really encourage everyone out there to go check out what Andrè and his team have built here at Edgeful, because as you can see from this quick segment, how cool this data is and how easily digestible it is. So I really, really appreciate you coming on here. Andrè, thanks so much for being here. We'll love to have you back, and we'll dive some more into the platform.
Absolutely.
This presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader, LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.